Hi, I'm Aloni Bhatt, and welcome to ET Future of Money Summit. It's our attempt to explore and educate ourselves on how money is changing and how it will change us and the ways in which it will impact us. Fintech, for some of us, has changed the way we transact with money, we access services. But can fintech be the catalyst for good? Not just enriching and empowering a few, but many. And to talk about this, I have with me a fintech founder and CEO who has rock star status among his followers. Nithin Kamath of Zerodha, welcome to ET Future of Money Summit.
Thanks, Meloni, for having me on this.
So, we're talking of a fintech for good, taking off from a recent tweet of yours, where you say volatility-wise, we're better off than the US. And that's been possible because of SEBI putting down stricter rules over time. And the rules may have hurt brokers in the short term, but people have benefited in the long term. Now, in the same vein, when you take this long-term view, what are the 2 or 3 things that you feel we need to put in place right now in the short term so that innovations in finance benefit not just a few, but many?
Right.
Could be stricter regulations, stricter norms for businesses.
No, I see. The thing is, one of the problems with the startup ecosystem is there are so many unsustainable businesses, right? And I had reasoned for this being almost like a tax arbitrage. If I as a founder want to take money by selling my stock versus taking dividends through profits, there is almost like a 30-40% tax arbitrage. So maybe that I sometimes even believe that like this whole tax incentive gets people to focus more on valuation versus profitability. So maybe something around that, because if the world goes into like a 2-3 years of headwinds like where we are right now, a lot of these businesses which need to survive won't survive, which is not good for the country in the long run. Also around regulations, the problem in finance is regulations are really made for the rotten apples, but it can sometimes stifle innovation as such, right? As in it's impossible. So maybe kind of bucket businesses into different categories and have different regulations, because today it's one regulation for all kind of businesses, right? If I'm a broker, SEBI's regulation is exactly the same for all the brokers, and it's the same thing for NBFCs, etc. So maybe kind of recognize businesses differently based on what they're doing, because there are different types of brokers. Not all brokers are the same. Different types of lenders. So that way we don't end up stifling innovation of sorts anywhere. So because for the country to do well, financial inclusion, financialization of the country, all of this is very important, and that can really happen, I think, if businesses kept innovating. I don't think what the financial products of the yesteryear can really help in financialization of this country. So these 2 things maybe.
But first of all, we have bringing in regulations, especially for new businesses, is tough. Now, on top of that, you're saying that bucket the regulations depending upon how people or how businesses perform.
Right.
That is going to make it extremely chaotic in terms of the regulator.
Not really. I mean, they're not like 20 buckets. There are probably 2 or 3 buckets, right? As in,
okay.
Right. So for example, let's there's whole talk about neobank, etc. Right? Maybe neobank requires a regulation which is different from the bank's regulation, the underlying bank's regulation. Because if you're going to categorize neobank as a bank and kind of put the same regulation, what is required to be a bank to a neobank, it can never fly, as in it is just going to die on day one, right? So it's the same thing in the broking, in the savings, investing experience. I mean, I think SEBI has done an amazing job, but the challenge SEBI has had is, we've historically in India, brokers have done frauds, right? I mean, now if the regulations are going to be put out there, it's going to be considering that rotten apple, right? As in, how can this guy not misuse this? But the way some of us operate, like some of the newer online brokers operate, is very different from how the older generation brokers used to operate. Because most of these frauds really, the genesis was portfolio management. A lot of people took broking licenses to advise customers, trade on their behalf, etc. It was like a way out around portfolio management. All the online brokers today that I know of, no one really interferes in customers' trading decision, right? I mean, we have never once asked a customer to buy or sell a stock. So when this is a scene, like I think we do like almost like between 7 to 10 million orders a day. The number of orders placed by our dealers is not more than 100, right? So whereas if you look at a traditional broker, the orders placed by dealers would be at least 20-30%, versus with us, which is 0.0001% or whatever, right? So the regulation required for these two kind of businesses is different, So I mean, it's a big challenge. I'm not saying it's not. It's like an easy problem to face, but I think maybe regulations should be, because there are different types of businesses coming out today, and maybe regulations should not be uniform across everyone.
Regulations need to keep pace, with business. You've made several investments in fintech startups. You continue to do so, and you often called it Nikki or push moment.
Right.
It's a business, so of course you want it to be profitable for both sides. But beyond, the business consideration and keeping the lens on fintech for good, what then drives your investment logic, and what would shift it or change it over time?
Yeah, no, see, the thing is, we have a large public market portfolio, as in my younger brother manages it. So, what we are doing through Rainmatter, which is, through the fund through which we are investing in a startup, is only for impact. Back in 2016, when we started this, that was a time we realized that we are becoming like a big fish in a small pond. And we said the real problem to solve in this country is to grow the capital markets and not really like just keep becoming a bigger fish in the pond types. And then we realized that the right way to grow the capital markets is by offering niche platforms. And we said we will only build what is core to us, and all the adjacencies and moonshots we will do by collaborating versus trying to do it ourselves. It's a very efficient way of doing it. One of the reasons why we didn't have to go raise a lot of capital, like venture capital, etc., is because we didn't try to attempt 20 different things at the same time. We collaborated wherever possible. So the thesis is the same, even today. So if someone has got an idea which can potentially expand the capital market ecosystem in this country, we've been saying more than the funding, I think what we've been able to help with is an audience, right? Because in finance, credibility takes a long time to come. You wouldn't trust with your platform with your money, etc., securities on day one. It takes, like for us, it took us 4 years before, 3 years when you got our first 10,000 customers, because people weren't trusting on day one, who is this brand, right? As in, this isn't a transactional platform. A broking platform is an investing platform where you save, invest for life. It's almost like a bank, right? So we showcase some of these startups to our customers. If the startups kind of build a product that's worth showcasing. We've helped with a lot of regulations. People are usually very, have a lot of questions around compliance and regulations. So this is essentially what we've done I've personally done for 25 years. So getting the answers out there, etc. So I think the value we bring on the table is not just the money, because today there are enough and more people cutting, like seed and Series A round checks, So I think the value we bring is in all of this, and we continue to do that, as in we are continuing to chase impact. Like right now, yesterday we spoke to a startup who's building finance for Gen Z, like in a different language, like in a language that the current 20 to 25-year-olds can understand. And there was like he gave a very interesting example. He spoke about emergency money, and he said, think of the example they have on the platform is you're living in with your girlfriend, and the girlfriend says move out, so do you have the money to move out? I said, I mean we've at Zerodha we have a lot of examples of why emergency fund is required, but not this. So we're constantly looking for that opportunity. I mean, we've extended that thesis outside. I'm personally very passionate about like health, fitness, etc. I think more people should be conscious, and so we've extended Rainmatter into now saying we will also help businesses that are making making healthier choices easier for people in India, be it around food or being around staying healthy, mentally, physically, whatever. So it's kind of extended from fintech to this as well.
Right. Good luck. But Rainmatter has invested in a lot of platforms like, for instance, Stoa, which is an online publishing platform. Then, Learn App, which is a digital learning platform, and others. Finception, which is again a content platform. So, why this focus on learning, especially, on providing financial literacy?
Yeah, I think that really is the biggest problem for this country. So I think even at Zerodha, right, when most customers come to us, they don't really understand finance, right? As in, they're really essentially enabled. This whole idea of saving, investing is enabled by peers, right? As in friends, family, whatever. And people typically end up picking habits from those people who enabled them to think about money and investing, right? As in, if your friend was doing investing in gold, you're most likely, also going to start investing in gold, right? It's like that. And I think, see, the thing is, for India, in the long run to become the economic power that it potentially can become, you need Indians to be backing Indian entrepreneurs, and the wealth creation to be happening within the country, right? For me personally, one of those points which has stuck out in this whole last 10 years of wealth creation is majority of it has really happened outside India, right? As in, you pick up, all the valuable startup in this country, maybe 10 to 20% of the holding is within India, right? As in, that is, at extreme levels, right? As in, otherwise, most of the wealth creation is really happening outside. And that's, how can a country become wealthy if, most of the wealth creation happens outside, right? And the reason that's been happening is because, entrepreneurs haven't had access to capital within India, right? So that's how you went chasing wherever the capital was available. So I think as a country, we need to start taking more risks. Wherever whoever can take risk. I don't think outside the top 3-4% of India can really afford to take risk, but the 3-4% of this country should be able to, kind of take risk, and they will be able to take risk, appreciate all of this if they understand finance well. And so this whole educating people on money, finance, risk is really, a very core part of whatever we think, and the reason we exist in this country, So even within Zerodha, Varsity is our education initiative, and we've been spending a lot of time and effort on this for the last 10 years. And it's probably in the top 3-4, kind of MOOC education initiatives around the world on capital markets. I think financial education is really the key for the country to do well in the long run. We now are working at, partnering with schools and colleges, because we believe that maybe the right way to solve for this problem is to teach people finance before your biases kick in. Because, once you have money in your, account and you're putting that money at play, right, you get influenced by fear, greed, and your learning doesn't, may get overridden. So if there was some learning before you actually had access to money, you probably, will do much better in terms of, managing that money is what we're thinking. And so we're trying to now see if we can find ways to nudge colleges and universities and even high schools to think of introducing not finance as a subject that's too much, but maybe at least, like 5 to 10
money.
hours.
Understanding money, the value.
Understanding money, right?
Yeah. Okay. And what's been the response like? I'd be especially interested in the high school response.
Yeah, it's tough, so I think high school's tough, but colleges are more reciprocative of sorts, right? Especially the management, like the MBA colleges, etc. So what we're doing right now is that we've created a Varsity Certification program. It's like a proctored exam that you can take. We've taken like 5 modules from within Varsity, which we think is a bare minimum that every Indian should know, and we've packaged it as a module with a proctored certification at the end of it. Now, this module is available, as on a mobile app, in terms of video, all of this. We're charging 250 rupees, which is the proctoring cost to take the certification, and also because you then know people who are serious only apply to take the certification. And we are trying to collaborate with the college, saying, would you be okay to open up this certification program within your college? And we will answer your students' queries. If anyone have queries on any of this, because it's all self-explanatory, the videos are very well made, etc. But we are also saying we'll do the solving for the query bit. So we are planning to take this live next month. So a lot of colleges have come forward and said, we will do this. So we need to see how many how many people actually sit through the content and and end up clearing the certification. But the certification, because like in today's world, especially among kids, in the Gen Z, right? You need a reward. You need something at the end of it. Otherwise, no one's going to do anything. So we're seeing if certification can be the enabler of sorts.
All right, it'll be interesting to see how this goes. I want to move to markets. In 2021, we saw lots of Indians flocking to the markets. Among them, lots of young people coming into markets, and the reasons for them coming into the markets for many, and I think among them were lower interest rate environment combined with frictionless access to financial markets, due to fintech services and online brokers such as your company. But investors right now are not that excited. So
Right.
RBI in its 2022 financial stability report said that the monthly active users in Indian capital markets are now less than 1 crore. In the short term, things don't look so great. But what's your outlook for the medium to the long?
Yeah. So I think one of the sore points in the last 1-2 years of growth has been, people have come to the markets with the wrong expectations, right? Because, a lot of this was enabled from social media, right? As in a lot of influencers on social media, and, all of them making it seem like, making money in the market is somehow very easy, right? As in, that was really the vibe, as in, like everyone came in thinking, they can quickly somehow make money in the markets, which is impossible, right? As in, and so it's good that the reality is sunk in fast, because this could have gotten, out of hand of sorts. So in a way, it's not bad that we're seeing a drawdown, because otherwise, I think you could have gotten to a point where there was froth built up. The good thing for India has been that if you relative to other markets, we've actually outperformed. Like while we are also still down, I think there's a lot of interest in India, right? As in not just in foreigners, even within India, etc. So that kind of holds good. So. But my view on the business is, we will do whatever the markets will do. We are essentially a mirror image. If you look at the number of new investors opening accounts every month, and you were to map the mid-cap index of the Nifty, it'll almost be a mirror image. So we will do as good as the market does. Now, how well will the market do? I have no idea about it. So, I mean, I am, but I'm more pessimistic than optimistic in the short run, because it somehow seems like this the mess that we've gotten into, maybe because of what US has done over the last many years, is not going to get through so fast. Right? That's my feeling, but it's very tough to say. But in terms of new user growth, I think we are also. See, the problem in India is, like, you referred to in that original, tweet also I was saying, which is we don't really have too many people with money to be able to save, invest, right? As in, not more than 10 crore Indians can potentially save, invest in the market. So you're the upside growth for this country in terms of new user participation in the short run. Yeah, it's a subset of that. It's not, unless, of course, India as a country does very well, and we go from this $2,000 per capita to 4,000, and then there is more money in the hands of people. That means now there is more money to save, spend, invest. So I mean, in both ways, I think internally within Zerodha as well, I think we have the best case outcome for the industries. I think 15-20% growth year on year from here. Right? I think what happened the last 2 years, this whole 100% is just a aberration. It's impossible for that to sustain.
Keeping the focus on markets, I want to talk about SIPs. Now, despite the flattening, SIP account openings, the average portfolio value also being down, the inflows via SIPs have continued to remain, steady. For instance, it's about 12,300 crores nearly in June and in May. From September 2021 to now, so that's 10 months, SIP inflows have been at about 10,000 crore a month. What does this tell you about the Indian investor?
Yeah, no, I mean, the thing is, India, hasn't seen as much volatility yet. I mean, yes, we are still down, right? But then, if you look at the index, we're down 10-12%. I think when the SIP flows will get affected is 20% and lower. So we need to see the behavior when you get to that point, right? Where, where suddenly you're down 20-25% on the index. If hopefully we don't get there, but that's when I think the behavior changes. Even in the US, it all changed after a 20% drawdown in the index, right? Suddenly everyone became passive, no one was doing anything. But until now, the behavior is beautiful because this is what you would expect people who do SIPs to do, which is stick and invest and kind of benefit from dollar cost averaging. But will people stick and continue their SIPs if markets were to be down for a prolonged period of time? I'm not sure. We need to see. What has happened is like this is a question that we ask internally as well, right? Today, because of a lot of platforms like us, which are very direct, and the customer is really doing whatever he wants to do, as in we are not influencing any decisions as such. Potentially, like people could stop their SIPs without the platform, nudging them to say, what, don't stop it. Traditionally what used to happen is distributors had that swaying powers on the customers, right? As in, if you were wanting to stop a SIP, you would call the distributor, and distributor, had an incentive to say, please don't stop, and today there will be no one who will say, please don't stop, so it'll be interesting. I think we will get to see what people do if we are in a prolonged kind of a bear phase, or if, the fall currently that we are in suddenly, becomes like a 20% fall of sorts. So behavior potentially will change at that point of time.
Do you have a time horizon in mind?
No, I hope it doesn't fall. So, but even this whole bearish phase where the market is not going up, it's kind of plateaued of sorts. I think 3 to 6 months is where people start questioning why do this. Because your interest rates are going up in your bank account. Your GSEC rates are up, so people see eventually what happens is money really moves to asset class that is outperforming. So the reason all of this money came to the equity markets was because equity market was the more outperforming asset class in this country. As in, if tomorrow it's fixed deposit, money will start moving towards it. So, so it's just that.
Okay, moving to central bank-backed digital currency. India is to get them really soon. And I was speaking to Professor Ishwar Prasad of Cornell University, and he's written a book, The Future of Money, How the Digital Revolution is Transforming Currency and Finance. Now, he says that digital transactions have taken off in India. And while CBDCs are welcome, the change has actually come about. Right. So how do you see CBDCs impacting the way we transact and the impact on the banking and the financial sector?
Yeah, I think he's right in that way that, I don't think it's going to make digital transactions more seamless. I think CBDC in countries where, there is no like a digital payments infra like what we have in India, I think it's more valuable than in India. I still don't have a view on it because we need to see what is CBDC going to be like, right? And if it's going to have too much control from the government, the adoption may be lesser, right? But for sure, for things like subsidies, fertilizer subsidy, etc., it's a no-brainer, So, but I think I'll have a more, like a better view on all of this once, at least figure
once it actually rolls.
Yeah. So.
Okay. So I want to talk about this account aggregator framework, and you've spoken about the need for banks, depositors, insurance companies, to go live on the account aggregator framework. Sehmati. Why do you see this as being critical?
So there are multiple use cases. I think the biggest use case today is for lenders, because they can lend better if they get more data, customer data. But the use case that I'm thinking of really is more around advisory. See, today, the problem in India is that, we've had millions of new investors come to the markets and millions of investors who don't know what they're doing really, and you need an ecosystem that will help them to do the right thing. Today, the big challenge we have, in the capital markets, building an advisory product is that if you were to ask a customer, can you tell me your bank balance? Can you give me a bank statement? Give me your insurance statement? He's going to drop off by the third question. right? As in, the best, see, to be able to advise, if you were to ask me some question around finance and money, I would need your information. I know without that, I can't really give a generic advice to you, right? So I think what account aggregator can do now is make that whole sharing of data very seamless, right? So for example, if you were to come to our platform and we had this, I consent for Zerodha to get, my financial info. And we can then give you the right advice, because the advice is very contextual today, right? As in, what works for me may not work for you, right? As in, and figuring out what works for you requires advisors today to get the customer data, which is impossible. People don't give it, because people have multiple bank accounts, multiple mutual fund folios, multiple insurance policies. I mean, most people themselves don't know what all they hold where, right? Which is other use case that can be built on account aggregator, which is, can you give a consolidated kind of a portfolio view for a customer? Like my dad, he's just got so many things all over the place. He has no clue where he's bought what. And this is just not my dad. It's just a lot of people, even young folks, right? As in, so I think I'm excited because of these, that we can potentially solve for these two problems. One is advisory, and the second one is just, give a consolidated kind of a portfolio view, which also makes, some of the other things, which is easier, because, today what happens if, at death, a lot of family members never get to know what were the financial holdings of this person, right? So you can kind of solve for many of these problems, with the account aggregator framework.
And do you see everyone actually coming on board to, help it happen?
Yeah, I mean, that's the only way it'll happen, right? As in, because it can't be like a half-hearted attempt. You can't have 5 banks. You can't have one depository. I mean, you need everyone to be on it, and sharing the data. That's really when it'll work. The good thing is the SEBI chairperson, early this year said that SEBI's on board. So which means, SEBI, all the SEBI intermediaries will be on it soon. The IRDA said they will be on it. I think banks, there have been resistance, but recently read some of the government officials saying that they're gonna almost enforce banks to start sharing on the platform. So yeah, very exciting times. I think it'll end up opening up newer opportunities for newer types of businesses in this country.
Okay. This is my final question to you. As a founder of a fintech company, as a funder to other fintech companies, and as this world enters what is being called a funding winter, as valuations drop, companies let go of people. How do you see the opportunity for fintechs in India, who raised nearly $8 billion in 2021?
Right.
And within that fintech, the bulk of the money went to lending and payments data.
Correct.
How are you seeing this environment shape up, and where will we see this growth?
Yeah, and I think one of the problems for the fintech industry in India has been high CAC, right? Because people have been spending too much money acquiring users. Now the problem with acquiring users paying too much money is then you have to think about how do you monetize them, right? As in, at some point of time, as in like last 2 years, maybe a lot of businesses didn't think about monetization, but eventually all business has to generate revenue, and you have to make more money than what you spend acquiring a user. So that's a challenge. I think in India, monetization is a big problem. It's very tough to generate revenue from the top, outside of the top 1 or 2 crore Indians. And I think that's where all the challenge will lie in the next 1-2 years for the fintech platforms to figure ways to monetize. Of course, in lending, monetization is kind of baked in. But the problem with lending is, you're kind of lending to people who can't otherwise get loans. So you're kind of taking higher risk. So, if the world gets into a spot of bother, what happens to these loans that you've lent out? So I think it's going to be tough times in the next 1, 2, 3 years. And, if you kind of speak to a lot of fintech founders, they're all thinking very similar as well. They're saying, we need to get more efficient, we need to become profitable, we need to become sustainable, etc. And hopefully that also means that people start questioning how much money they spend on acquiring user, because really the genesis is that, as in if you spend, like say 10,000 rupees acquiring a user, you have to find ways to generate 10,000 rupees from this folk, right? As in, it's very tough, So, yeah, if you were to kind of benchmark what is happening in the US right now in the startup ecosystem, especially around fintech, and the kind of haircuts they have taken in stock price, it's kind of quite ridiculous, because I think the last 2 years, a lot of fintech companies could raise money saying, this company is at $100 billion, what, I deserve at least $10 billion, so the problem is that company is from, it's come down from 100 to $10 billion. So you can't even make that argument anymore, saying, like, I'm relative valuation, I need to get at least this much. So, but like I said earlier, I think it's good that this happened earlier than later, because this then makes the entire ecosystem a lot more efficient and sustainable and all of that. Otherwise, the bubble would have just gotten bigger and eventually exploded, where the trouble would have been a lot more. So this whole, whatever happened, I think earlier is better of sorts.
You're calling it a bubble, huh?
I mean, it has to be. I don't know if, I mean,
I know you're saying.
I mean, valuation wise, I think it definitely, not just India. I mean, even in the US, as it I know one of our peers in the US is a company called Robinhood, right? As it was worth $85 billion 6 months back, 8 months back, whatever. It's at $8 billion today, right? As in, if it was not bubble, how is it at $8 billion? As in, it's impossible, right? So I think yeah, there was a lot of excesses, and I think it is again, the problem was too much cash sloshing around, and probably the blame lies with the US government, really, at the end of it, because they kind of enabled all of this.
Okay, we're going to lay the blame at the door of the US government. But Nithin Kamath, thank you so very much for your time and for your very candid thoughts.
Pleasure. Thanks for having me on this.